Well, the performance of the South African economy has continued to disappoint in the early part of 2013, with GDP growth slowing to an annualized 0.9% quarter on quarter. That's in the first quarter of the year. However, things could have been worse as we get into an analysis of the South African economy. Sizwe Ngwadana, Chief Economist at FNB, joins us in studio. Sizwe, thanks very much for your time.
Oh, good evening.
So, are we in a somber mood when it comes to South African economics?
No, I think so. We've seen growth lose momentum domestically, 3.5% 2011, 2.5% last year. And we think that that's likely to continue over our forecast period to the end of 2014. We've got growth at around 1.9% as an average for this year, and that assumes a further moderation in domestic demand off the back of slower government, slower household consumption and slower fixed investment, and very little compensation from net trade. In other words, a narrowing current account deficit.
Sizwe, the one question I want to ask is, what has been the impact of the higher fuel prices on those consumption patterns? Has it been acute or really?
Yeah, well, you've got to look
minor?
at the whole inflation basket because household consumption is actually driven largely by real disposable income. And that's in turn driven by the whole inflation basket. So you're seeing the weak rand keeping or leading to the rand oil price, and therefore domestic petrol prices rising. But if you look at the overall inflation basket, it seems that oil price and that rand oil price is keeping inflation or preventing inflation from moderating significantly. But overall inflation is not something that's too horrible for household consumption.
So you're saying that we're seeing the tail end of the benefits of above inflation salary increases for public servants as well as for mine workers?
No, well,
we're still seeing that benefit.
So not necessarily for mine workers, but I mean overall we think that the tailwinds for domestic demand in South Africa, including for household consumption, are going to become less of a tailwind or even start becoming headwinds. Now, if you look how we've recovered from the 2009 recession, it's essentially been underpinned by unsecured lending and very vigorous counter-cyclical fiscal policy. Now, we've got anecdotal evidence from the banking sector that unsecured lending is likely to taper off. We've already seen that happening in terms of unsecured lending coming from growth rates approaching 60-odd% year on year, going by the NCR data around 2011. The latest number, I think, was around 8%. The other tailwind was obviously, as I've said, government spending. If you look at the government's income statement on the expenditure side, wages or the compensation of employees grew by 8% in real terms on average over the last 4 years. They're budgeting for it to only grow by 1.3%, and we'd assume that they tend to stick to that. Otherwise, we start risking or increase the risk of a rating as a downgrade. And therefore, if they do stick to it, then fiscal policy becomes
I want to focus on the MPC tomorrow and your thoughts on how you feel the South African Reserve Bank governor is managing interest rates. Do you give her a thumbs up?
No, I think a thumbs up. Very transparent in terms of the communication, and I think monetary policy is appropriate for the competing forces that are shaping the inflation and the growth outlook. So if you allow me to be a two-handed economist, on the one hand you've got very weak growth in South Africa, and we don't think that the SARB would be inclined to want to hike rates given the fact that growth is weak. They've already revised their own growth forecast to 2.4% and then subsequently mentioned...
But you still feel that 2.4% is optimistic, given that yours is sitting at 1.9?
Well, so does the SARB. They've already said that they are likely to revise that 2.4% downward. So tomorrow we are likely to hear Governor Marcus come out with a lower GDP forecast. I mean, if you just look at the 0.9% growth for first quarter, for you to get to around 2.2%, which is consensus, there has to be some hefty recovery over the rest of the quarters, which we think is unlikely given the underlying drivers of the economy at present.
Do you think she has dropped interest rates too low? George Glinos, ETM, certainly thinks that they have gone too far.
No, I don't think so. I mean, I think if you're recovering from the type of recession that we recovered from, I mean, it was a global balance sheet recession, monetary policy was reduced excessively everywhere in the world, and I don't think that what South Africa's done is out of line with that, and I think it's also appropriate. I mean, but in terms of the outlook, we think that rates stay at current levels. at least for the whole of 2013 and the whole of 2014.
Sorry, you just opened the door there. In terms of interest rates, we've seen Turkey, India, and Brazil raise rates in the past month, just to stem outflows and help protect the current account deficit. You don't see us doing something like that 6 months from now, for that specific reason.
So if because the transmission mechanism is if you have a large current account deficit, so you're supplying a lot of rands, around 200 odd billion by our forecast over the next 2 odd years. It's fine if you can fund it, but the issue then becomes, in a tapering environment, are you going to be able to fund that current account deficit? If tapering leads to an increase in US bond yields, which disincentivizes that global search for yield, which has supported the rand and risk assets and SA government bonds. Now, we think that the exchange rate will appreciate a little bit. In other words, we've got a forecast of 960 for this year, and we think next year we average around 980. And given our estimates of the current pass-throughs, we don't think it's too much of a problem for the overall inflation rate. So we've got inflation sitting at around 6% for this year, coming down to around 5.5% next year. If that pans out, then we think that buys time for the SARB to keep monetary policy.
Ashraf, I want to ask you a question on investing in South African equities at the moment. What is your stance given the economic underpin we're hearing from a couple of economists across the board?
You know, I've had this debate in terms of where things are going.
I hope you've had this debate, because that's why you're sitting on this desk, to give us some insight.
And, you know, it's interesting that some people feel that the economy will recover and will be quite strong 12 months hence. I'm not convinced. I think we're going to be more or less the same state. GDP growth may be at 2.5% then, but I don't think it will be necessarily that exciting. So my sense of it is that you will still go for safety. I think some of the consumer stocks are on heady PEs and not justified right now, which makes it very difficult to invest. I'm not going to speak about my sector, which I'm invested in right now, because there's
it's ring-fenced from further discussion on the
but
news desk.
Right now, I like some of the financial services companies. I think the banks are fairly priced.
You haven't been on the desk with me for a while. You know,
No,
when
I
you say
haven't.
some of the financial services.
Yes, I know you're going to pin me down.
Exactly. I want some names.
Okay. First Rand, Standard Bank, very happy with. I think that Nedbank have had the upside, and I think upside is limited going forward, given their growth opportunities within the markets where they're operating right now.
Would you be buying First Rand and Standard at current levels, or are you holding them?
I'd be happy to hold them at these levels. I also like some of the smaller financial services players. I like a Peregrine. I also like Capitec. We've seen the bad news, I think. Their funding costs are going up, but I think they are far better operation than Able.
Well, on that point, let's bring the economist back into the discussion. The bubble in the lower end consumer and in unsecured lending. Is it there? Is it going to burst? This feeds directly into Ashraf's view on Capitec.
Well, it depends on employment prospects there, but we don't necessarily see it as a bubble. Sure, unsecured lending has increased quite significantly, even as a proportion in terms of market share of total lending. But what we already see happening now is that seems to be being nipped in the bud before the fact. As I've already said, we've seen the growth rates come off from almost 60% year on year around, say, 18 months ago to much lower single-digit growth rates. So I think that risk is being mitigated as we speak.
I'd like to do a consensus across the board on all these Rand forecasts. You mentioned 980. Just give me a medium term. It's crystal ball time here in terms of 3 months out. Where's the local unit going to be trading when it comes to the dollar?
Yeah, so we think second half of the year, because of all the hurdles, we still got the wage negotiations, and you've still got the pinpoint of when QE tapering is going to start. So we think that over the next at least 6 months that the rand remains choppy, but remains at sort of around the 9.80, 9 to 10 level, which then if you say first half of the year was relatively strong, you've got a year-to-date average of around 9.22, and you've got a second half of the year around, say, 9.90, 10, that gives us roughly that 9.60. And then we think next year we start the beginning of the year at a slightly weaker exchange rate, around 10, and then appreciate over the course of the year.